You can tell pretty quickly if someone can or can't find that information, if they have a problem with their bookkeeping. That's always a red flag, because if their finances are a mess, they need to clean that up before they can pursue any type of exit strategy. A lot of times business owners it won't be a true business. It'll just be like the whole business revolves around them, or it's all in their head. Like they don't have any documented processes, procedures. If they die tomorrow, their business dies too. Those are all red flags, and they're really common red flags. And so a lot of times, if depending on their motivation to address those red flags, and them seeing, sometimes they don't see it as a problem, and then that's kind of a non-starter. But if they realize that, yes, the business revolves around me, the business doesn't exist without me. If I die tomorrow, this business is going to go away. I don't want that. I need to change that. Then we can move forward.
On this episode of Business Growth, we're talking with Ashley Micciche. Ashley is the CEO of True North Retirement Advisors, and we have some wonderful conversation around business, finance, and really the essentials that will help you out in your business. I get a lot of interview requests, and I have to be very particular and selective on who I want to have on the show. And there's a serious vetting process that goes through. We have to make sure that they have a good reputation, that they are a solid interview, and that it's someone that's going to provide value to you, the listener. Ashley checks all of those boxes. She's seriously an outstanding, brilliant business thinker, business mind. And I think there's some things that you're going to glean from this episode that will really help you out in your business. So we'll put all kinds of links, valuable resources inside of the description of this episode. Feel free to reach out to Ashley, give her a thanks for being on this episode, and we're going to jump right in. Ashley, welcome to the podcast.
Thank you. It's great to be here.
Absolutely. So there's actually a lot of lead up to this conversation. We've been emailing with your team. We wanted something that was going to be a unique conversation for business owners. See, most of the time it's about growing the business, or it's this plan of starting a business, but a lot of people don't get to the phase that you specialize in, which is, hey, I'm done. I want to retire, or I want to create some legacy. So today is extremely special. So let's do this. First, let's give a quick snapshot how you explained what your company does, and then we're diving into the details and the topics.
Sure. Yeah. So I'm the CEO of True North Retirement Advisors, and at True North, we work with our business owner clients. So our niche is working with business owners. And so one of the main things that we help our clients with is figuring out how their business fits into their overall retirement plan. So we will build and implement exit plans that address, in their unique situation, who they want to transfer to, what that looks like, how to do that in a tax efficient way, how to protect them and their business. So it's a pretty comprehensive plan. But then in working with business owners, we also manage the entire financial relationship. So we'll manage their personal investments, their company 401k plan, in addition to the exit plan. So it's something fairly unique. There's not a lot of advisors out there that kind of handle all those aspects for their business owner clients. So our goal is to be able to address all of that in a very comprehensive and holistic way for the clients that we work with.
Awesome. Well, that's well put together. So the reason why we have this conversation is because I think it stems from someone that's built a business, and there's this inevitable question, which is, how much is my business worth? And then they start to dream or fantasize about like what's next. So is that, let's jump off from that point right there, the evaluating the business. There's a lot of backstory and elements to it. So can you help simplify and help us understand how you guys think and why it's different than others.
I think for most business owners, especially if you have a successful business, and let's say you've been running your business for many years, you've built up this valuable asset. And for most business owners, too, they tend to keep reinvesting back into the business to oftentimes the neglect of, putting money into an IRA or 401k or other investments. And so when they get to the point of wanting to retire or begin to think about that, there's this big asset that's their business, and it makes up for a lot of business owners. It can make up over half of their net worth, sometimes as much as 90 or 95%. And so then we're in this situation where we have to sell the business. We have to be able to navigate that well and successfully to the end, so that when they do retire, they have something to retire from, and they have an asset or an income stream that can sustain them and their family for the rest of their life, so that they can retire and hopefully live a comfortable retirement. And so understanding what the business is worth is valuable at all stages of the business, because it can inform you on strategies that you'll take to increase the value of the business. But especially as you get to the end, and by end, I mean, the last 5 to 10 years are really this critical time where some deeper planning needs to be done in order to exit the business successfully. Unless you just want to walk away and leave the business and get nothing from it. Usually, it takes about 5 to 10 years of doing things along the way to either grow the value of the business or protect it and ensure that it can transfer to that next owner, and then provide this asset or income stream in retirement.
So without getting into, the details of the 5 to 10 years, because, at that point we would talk about, operations, processes, systems, and things like that.
Yeah.
Um, there's something that's hidden in that language of 5 to 10 years deeper planning. That means you're often, as your company, you're probably dealing with larger businesses because of the amount of time, 5 or 10 years, and that long planning. Is that accurate? That you're primarily dealing with businesses? What are we talking? 9 figure? Are you dealing with smaller businesses? Help us understand that range.
Yeah, most of our clients, we're based in Oregon. Most of the businesses here in Oregon, where I am, are small businesses. They might have, my largest client has about 150 employees, and my smallest client is just him, and everywhere in between. So revenue, most of the revenue of my clients is in between, I would say, 1 to 20 million, but most of the clients that we have, their revenue is in the 1 to 10 million range. So mostly small businesses, and that's where it's very critical. They're not going to be able to necessarily go to a third party and sell their business for top dollar. And there's a lot of value that we can provide to those small businesses who maybe it's just them and one or two other key employees. That is really critical that they get the value that they need, and they see this exit to its successful completion. That's very, very important.
Are those primarily just by hearing the numbers, as far as like company size, and then what they're doing financially? Are these like service based businesses, blue collar businesses? What are they?
Oh gosh, it's all over the map. So I have manufacturing clients, I have software companies, I have law firms, other service-based businesses. It's all over the map, and I think every business is unique, but there are certain threads that are consistent with different businesses across different industries. So it's just figuring out what is the owner or owner's primary objectives, whether what are they trying to accomplish with this exit? Do they need to sell their business? And if so, for how much? and then we can backtrack into, okay, well, what's your business worth today? Do we need to grow the value of the business, or can we embark on this exit plan now?
And are you finding, and we're going to get into the details in a bit, but are you finding that most business owners are overestimating the value of their business, or are there some people that are like, I would assume that's the case.
Yeah,
Okay.
I think, business owners, they're an optimistic group of
Yeah.
people. And I think they tend to overestimate what their business is worth. And sometimes that leads to a tough conversation, but it's a good conversation to have, because it's better to know that at the outset of planning, rather than get towards the end and I want to retire yesterday and I need to sell my business for $2 million, and oh, it's only worth 500,000, that's not gonna work.
So let's start unpacking. You mentioned, because you're all over the board, and this is what's really helpful for your listeners, is that for you as a business owner, um, Ashley mentions that she's helped businesses that are service-based, software, manufacturing. So across the board, it could be blue collar, white collar, SaaS tech, whatever that may be. And I think it's really helpful for us to look and extract the common elements. And then I'm sure we can touch on things that we need to be aware of. And then the bulk of this conversation, I really want to hit in the gap of there are things that most people just don't know because they don't know how to ask the right questions. So let's first start at
Mm.
what are the common attributes in that area on regarding the valuation of the business and how much it's worth.
There's a few high level key metrics that determine business value that are consistent across the board. So, the two primary drivers of value in any industry are your top line revenue and your pre tax income. And it's different for every industry. Certain industries, like tech, is a great example. So, a lot of tech companies have that are very valuable. You hear about these in the news all the time. They have zero income. It's all based on like future growth. But then, manufacturing business might have a completely different, valuation with those same data points. So the key is comparing that obviously to other businesses in your industry, and that's where the valuation really shines, is that it allows you to do that. But revenue and pre-tax income are really the two main drivers of value across the board. Um, there are other ones as well that are pretty important. Accounts receivable, accounts payable can really determine value, and be a real big driver of that. Usually, debt is another big one too. So, if you owe money to the bank, how much do you owe? What does that look like? That has a big impact on value. And then another big one, especially for smaller businesses, a lot of small businesses, you think of like a manufacturing business. Well, maybe they also own the space that they operate out of. I have a client right now who his business is worth about $3 million, but the business property where he operates his manufacturing business out of, that's worth more than the business itself. And so there's this whole other elephant in the room, that's the property of the business, that also needs to be addressed in the exit, and how we're going to deal with that as well. So those are some of the key drivers. Well, I would also say EBITDA margin, which is kind of a jargon word. It's earnings before interest, taxes, depreciation, and amortization. um, that metric of it's a percentage. So whatever the EBITDA margin is as a percentage, that's also a big driver of value as well. But these are all things that any good business that has reasonably clean books and records should have at their fingertips. You should know your revenue, your pre-tax income, accounts payable, accounts receivable, things like that. Those are the primary drivers of valuation across any industry.
You said should have clean books, and then I kind of laughed because it's kind of notorious for a lot of these smaller businesses that are a couple of people, or 10 or less employees, oftentimes just have really messy books, or they get
Mhm.
lazy and they use this same accounting firm, and then that firm does bookkeeping, and then they do payroll, and then all of a sudden 5 years later and you see there was fraud but you didn't know it. You know what I mean?
Oh, absolutely. I mean, it's a huge issue for a lot of small businesses.
Yeah. So for you, I would imagine you've been in this world so long that you're able to kind of get a knee-jerk reaction to businesses. And I'm saying that, and this is general term speaking, just so you know, that when a new prospect comes on board, they tell you about their business, you kind of suss them out. There's probably a knee-jerk reaction where you're like, yes, this is something that's actually going to happen. And then there are probably other conversations where you're like, these are immediate red flags. Like, no way this is going to happen. Do you get those knee-jerk reactions like that?
Yeah, and actually what you just mentioned with the books and records, you can tell pretty quickly if someone can or can't find that information if they have a problem with their bookkeeping. That's always a red flag because if their finances are a mess, they need to clean that up before they can pursue any type of exit strategy. A lot of times business owners it won't be a true business. It'll just be like the whole business revolves around them or it's all in their head, like, they don't have any documented processes, procedures. If they die tomorrow, their business dies too. Those are all red flags, and they're really common red flags, and so a lot of times if it depending on their, motivation to address those red flags and them see sometimes they don't see it as a problem, and then that's kind of a non-starter. But if they realize that, yes, the business revolves around me, the business doesn't exist without me, if I die tomorrow, this business is gonna go away. I don't want that, I need to change that, then we can move forward. But yeah, there are a lot of, red flags depending on the situation. Another one is most business owners, and I fall victim to this too. I am this way horribly, but do not like to give up control. They can do it best, and no one else can do it as good as they can. And so it takes time and effort and a real, focus on trying to train that next successor owner or your employees so that you can begin to back away from the business, from the day to day. But most business owners are not willing to do that, and they're scared to do that. They're scared to give up control. So there's a lot of fear there, and that's usually a big hurdle that a lot of business owners have to overcome as well.
So I'm actually writing down the red flags, and for you as a listener, these red flags, this is more or less like the checkpoints that you want to say, hey, I need to overcome every single one of these pieces to make my business more valuable. And hopefully, many of you are already doing that. And sometimes we're weak in areas. Out of all of these, I'm looking at my assumption is that the finances, and I want to verify this from you, finances are probably the easiest one to clean up and to get on track. Would you agree?
Yeah, don't hire your like 16-year-old daughter, pay her a salary and have her do your bookkeeping. Those kinds of things. A lot of times people will have family members in roles that they shouldn't be in or they're not qualified for. And you can do that by just paying market rate for a person to do a good job and hire a good person to fulfill that role. So that is a pretty easy problem to solve. And you mentioned the fraud earlier. That's a big. I've had a couple clients actually who have had that happen. One of which was they're now divorced, but his wife was doing all of the books and accounting work, and there was no controls. There was no checks and balances. He was very hands off. She was stealing money from the company and sort of lining her own pockets. And then they ended up getting divorced, and he found out all this stuff after the fact, and he really couldn't do anything about it. So, even with people you trust, or even with the right people, having the clean books and records, having the right financial controls in place so that you can protect the business from fraud is something that is very easy to clean up and fix.
Yeah, that was really good. And for you listeners, what we'll do inside of the description, the show notes of this episode, we'll put a link to Ashley's site and how you guys can get in touch. Because I imagine, there may be some red flags that you have and you want solutions to that. So we'll put that in there for you. But going over to the valuation of the business, that varies depending on the type of business and the industry. And I'm just speaking for myself. I've sold a couple. I've bought a couple. I don't have the expert knowledge like you do. Nowhere near that. So that's why we're talking today. But we look at like the valuation. Can you kind of paint a little bit of a picture of saying, hey, if you're a tech business, you should expect this kind of multiple. It's going to be higher than if you're a retail location, or if you're, you have 2 employees in your service business. Can you kind of help us understand that blueprint a little bit?
I don't know enough about each of those particular industries off the top of my head to say, oh, well, a typical, tech firm is going to sell for 5 times revenue, where a typical manufacturing firm might sell for 3 times revenue, or those kinds of rule of thumb metrics. Um, I think what's actually more consistent is and why you hear a lot about scaling up is because as your revenue grows, your valuation grows. And this is true across the board. So let's say I have a business that does about $1 million in revenue. Well, generally across most industries, I would say somewhere around like 3 times revenue would be the upper end of what you might be able to fetch as far as like a valuation for your business if you were going to sell it. But when you get up to like 5 million, that exponential, that X growth. So instead of 3 times, you might get 5 times. And then if your business is worth, or if your revenue is like 10, 20, 30 million, you might get 10 times the revenue when you sell. So growing the revenue, and like I mentioned earlier, growing the revenue, growing the income of your business leads to a pretty steep growth in value, where a small little business that's doing 100,000 in revenue can maybe only get 100,000 in value or sales price. But if I'm doing 10 million, maybe I can get 100 million in terms of value when I sell my business. So that's the primary thing that I think is lost on a lot of business owners, and why scale and size does matter, particularly from a valuation standpoint. The struggle, of course, is how, if I have $1 million business, how do I grow it to a $10 million business, and do I even want to do that?
Yeah, the why do it is a big piece,
Yeah.
and even the model itself. But so the logical um, point of that is, the larger your business, the $1 million business versus a $10 million business. 10 million more than likely means you have really good processes, systems, people, infrastructure in place, and that hopefully you're not the bottleneck of the business. That's an assumption that I make. I would imagine that there is something hidden in there that that I don't.
Oh, I think the most successful businesses that I work with, the owner is, I'm thinking of one in particular right now where he's certainly involved in the day-to-day aspects of the business, but there's a lot of trust. He has good people in place. He has processes. They have diversification in terms of like the clients and customers that they work with. So he kind of has checked all of the boxes to do everything he can possibly do to, like you said, remove himself as the bottleneck of the business. And so, the best business owners, they know how to run the business, and they know how to grow the business, and they know what it takes to do that, and so the business can run efficiently, whether or not they're there every day or not.
We're gonna kind of shift gears a little bit. What you said earlier was, a person scaling a business, and then you said if they want to. I believe that's what you said. Don't take me for that on transcription.
Mhm.
Oftentimes, I think people, they just don't really want to grow it to a certain level, and the question I'm thinking is, you're dealing with people, different situations. Typically it's like the 3Ds. Death, divorce, or what's the other one? Can't remember. There you
Disability.
go. Disability. Yes. Of why they're selling. What are you finding the reason why people sell? Is it frustration they didn't get to the level they wanted? Is it the 3Ds? Is it something else?
No, I think most of my clients, when they start thinking about their exit and wanting to sell, it's because they're just done. They want to do something else in life. A lot of owners are still working 50, 60 plus hours in the business, and they have other priorities. I think what I find in working with my clients, and this is something that I found, I've been doing this since my early 20s, and it's really helped me to have the right perspective, because I see that as my clients get older, their family becomes much more important to them. They have other priorities outside of their business. They just don't see the value in committing themselves in that way to their business anymore versus when they were maybe in their 40s, or 50s. It just changes. And there's that's perfectly fine. We want that. The goal is that you live a meaningful and fulfilling existence on this planet. And so, you know being a slave to your business is something that happens to a lot of business owners, and but it happens to the detriment of other things. You mentioned divorce. Maybe they don't have much of a relationship or a good relationship with their spouse or their kids, because of the business. There's plenty of business owners out there who have that situation. So I think primarily, my clients, they get to the point, they're, in their late 50s or early 60s, and they're like, I don't want to do this forever. I need to figure out the best way for me to move on. And then that's where we come in.
What does it look like? So are you're talking with them, they're saying, "Hey, I'm done." Is it many times that you're having to coach them and say, "Hey, look, like let's get that multiple a little bit higher. Let's put these systems in place. Let's build this exit plan properly?" Or is it sometimes that they're just like, "No, I really am done. Like I don't want to do anything."
Yeah, that's a good question. And the answer depends on, do they need to sell the business to be able to retire comfortably, or do they want to? Like, there's a big difference between, I need to sell the business for X versus, oh, it would be nice. It would be gravy on top. So if they need to sell the business and it's not yet where they need to be, then they do, need to work in the business a little bit longer. We do need to put in things to try to grow the value of the business and close that gap from where it is now to where it needs to be. But yeah, it's different in every situation. So a big part of the exit plan is often growing the business. And then for other clients who already are there, we're just trying to protect and preserve what they have and maximize, the after tax value that they can get, things like that.
I want to touch on psychology for a second. So you're pretty lucky that you get to see people in, I mean, we'll call this it's a fairly high stress, activity. It's like it's more stressful than buying a house. I think buying a house is easy. This is like
Mhm,
this
mhm.
is your baby. You know what I mean? And you help navigate people through that. Help us understand the psychology. Like, what are some of the emotions and what is some of the stuff that a normal person that's not there yet doesn't get, but they will once this happens?
Gosh, Spencer, you are so good at asking these questions, because the psychology is so important, and it's glossed over for the financials, and it shouldn't be. So I think the biggest challenge for business owners from a psychological standpoint in exiting their business is that their identity, and whether or not they know it, but a lot of times, their identity and the value and their self worth, a lot of that comes from who they are in relation to their business. I am this, I am that, I own this business, I've been running it for, 20, 30 years, whatever that is. And a lot of their just identity as who they are and their value comes from that, being a business owner. So, sometimes, a lot of times, um, we work to really identify, do you really want to exit your business? Do you want to fully exit? Do you just want to be able to, work maybe 10 hours a week, or whatever that looks like? We have to figure out what it is that they truly want, and what what attachments they have. I think attachment is a big deal. Attachment to their identity, attachment to the prestige maybe that comes with, especially if they're very successful. Seen quite a few, and this happens. There's a lot of research to document this because it's not just business owners, but people after they retire, a lot of people end up after that honeymoon period, after they've done all the house projects and gone on all their must-see vacation places, destinations, they're like, "Oh my gosh, what now? What next?" And so they lose a certain purpose and meaning that they weren't necessarily expecting. So the key is to identify, okay, what after I transition out of this business, what am I going to do in life that is going to provide me with purpose and value and meaning and replace what I was doing before? And if I don't have a desire, if the only thing that provides meaning in my life or the most important thing that provides that meaning is continuing to work in that business, then maybe we don't pursue a full exit. Maybe there's a hybrid where, somebody else is running the day to day and you are still involved in the business. That's perfectly fine. We just need to identify what that is, and making sure that we're not just blindly pursuing this exit path without knowing what the potential negative consequences of that could be.
You struck gold with that. So listeners, like, that thread that we just went through is one of those things you probably want to hit the back button on and listen to again. And if you're saying why, because maybe you're, still in the startup phase or the romance phase of it. Here's why. Because a comment that a mentor gave me a long time ago just figured it out from what you said, which he told me, never have your identity in the business. Always have something else that brings you pleasure. Your business is your business. And I didn't fully understand it until you just explained it right now. So that was incredible. Really, really good. What else are you seeing happen with these business owners when they decide it's time to exit? Are they often, just looking after the romance period? Are they saying, "Ah, I want to give back. I want to start another one"? What is it?
I want to play golf more. Yeah. Um, Sometimes it is like you said, it's a health issue. I had a client who had a pretty big health scare, and his business is in a state of a bit of chaos right now, along with his personal life. And I came to the table pretty late after he had already embarked on an exit plan and an exit path, and so um, we're trying to kind of pick up the pieces at this point. But yeah, every business owner is different, and their priorities are different, and what they want to accomplish is different. I think the having taking the time to reflect on what it is you want your life to look like with or without the business is critical. But then some people don't have the option. Like the number one reason why Americans across the board retire earlier than they planned is because of health reasons. So, you have to do a little bit of contingency planning too to make sure that the business could survive if you had an unexpected event like a disability or a health event or a health crisis, or, something that prevented you from working in the business.
You're bringing up so many valuable pieces, and this is a conversation that we could go on and on. Obviously, both of us love businesses, but what I want to ask as a final question is this: what should I have asked you that I didn't?
Good question. I think maybe a question that comes up all the time as far as the valuation is, can I really do this without paying somebody $30,000 to do it for me? And the answer is yes. Technology now allows anyone who wants to find out what their business is worth to do that very quickly and very easily. And so, I would just encourage any of your listeners who, even if you're just curious about what your business is worth, even if you're, 10, 20 plus years away from your eventual exit, take the time to find out what your business is worth. It is absolutely the foundational element to not just an exit strategy, but protecting the value, growing your business value. You can't embark on any of these strategies to protect or grow your business without first knowing what it's actually worth. So, if I could impart any advice or strong encouragement to your listeners, it would be to take that time. It's not a lot of time to figure out what your business is worth.
And to have a realistic picture of that, knowing the outcome. You don't want to start a business and feel like it's, going to be worth, 20x than what you're assuming it is, because then all of your plans are toast. What you have done is created a software. Can you say what that link is, and then we'll obviously put that in the show notes.
There's a free valuation checklist that will help business owners. It helps you basically gather. There's about 8 pieces of information. We've already talked about several of them. But what are those pieces of information that you would need to value your business? So I created a checklist for that. And then we subscribe to an online valuation tool. There's like 50 million businesses in this database. So no matter what your industry, what your niche is, you can find comparable businesses to compare your value to. So it's a valuation tool. It's an amazing software tool, and what it allows you to do is value your business for free, and the estimate is very, very accurate. So you can get the checklist, free access to our valuation tool if you go to truenorthra.com/value my business. It's all right there.
truenorthra.com/value
Value my business.
my business. Excellent. Listeners, like all the other episodes, I'm not an affiliate. I don't get paid for this. I only bring on people that I think are going to bring a ton of value for you. So that's why we're having this conversation. This was awesome. I think that we really got into the details on a few things, but we stayed in the psychology. And oftentimes on podcasts and people, perusing through books, they want the technical details, but they don't realize that it's always the psychology that wins. It's not the technical details. You can whip through technical fast. So, and you just hire awesome people to handle the technical details. If you're a business owner and you're good at starting, growing, leave it to someone else to help you with the other pieces. It was definitely a pleasure chatting with you today, Ashley. We'll put all of your contact information in the description of the podcast, along with the evaluation tool. If you as a business owner are still trying to navigate, figure out what it's worth, or maybe even just want to get a snapshot, even if you don't want to sell, but it just gives you a target to start aiming for, do it. Selling a business is awesome. I did it. Sold my first one in my early 20s. It was actually miserable. It sucked. And it was. And I hope that no one ever has to go through that misery like what it was. It was awful. So thank you so much, Ashley. It was definitely a pleasure.
Thank you, Spencer. It was a real pleasure to be here with you today.